What's most important to you when it comes to choosing your financial advisor? Someone who's aligned with your biblical values. How about someone who will take the time to explain your options? Certified Kingdom Advisors are professionals who meet high standards in competence and integrity and have been trained to offer biblical financial advice. To find a Certified Kingdom Advisor in your area, visit faithfi.com and click Find a CKA.
They say life insurance is like a parachute. If you don't have it the first time, odds are you won't need it again. Hi, I'm Rob West. A funny line, but all kidding aside, life insurance is the only way most people can provide for their families if they should die. But what happens when it ends? I'll talk about that first today, and then it's on to your calls at 800-525-7000. That's 800-525-7000. This is Faith and Finance, biblical wisdom for your financial decisions. Of course, we're talking about term life insurance here, which we almost always recommend. It's far cheaper than whole life and doesn't mix investing with a death benefit. You're much better off investing separately from an insurance policy. Now, term insurance by definition ends when the term expires. And we often get this question from listeners. What then? Well, generally, you have four options. The first is to simply let the policy lapse. If you had a 20-year policy that's ending, at this stage of your life, it's quite possible that you no longer need life insurance. If the kids are grown and out of the house, supporting themselves, and your spouse's income plus Social Security survivor benefits is sufficient, then life insurance is a needless expense that you can put to better use in your retirement account. But if you still have dependents who rely on your income or a spouse whose income can't meet expenses, then you still need to have some type of term policy. And that leaves you with three more options. The next is to get a completely new term policy when the current one expires. We normally recommend one with a death benefit of 10 to 12 times your salary. Don't be surprised by how much more a new policy at this later stage in life will cost. A 50-year-old healthy male can expect to pay around $80 a month for a 20-year, $500,000 policy, or around 4 times the cost for a 30-year-old. That's simply based on actuarial tables. It's nothing personal. Of course, if the policy is only to provide for your spouse and not dependent children, you may be able to get by with less. For example, a policy that would pay off just the remaining principal on your mortgage, if any. And while the cost of a new policy might have given you sticker shock, it's usually less than you'll have to pay to simply extend your existing policy, which is another option. Why is that, you may be asking? Well, if you decide to get a new policy, you'll have to go through all of the underwriting procedures you did at age 30, a medical exam giving an extensive medical history, blood test, and so on. When all of that is complete, the insurance company has a pretty good idea of the risk it's taking on. Okay, so let's say you go through all of that and you're approved for a new term policy, but the monthly premiums are too high. Well, you have a few ways to bring them down. You can lower the death benefit. Instead of $500,000, maybe you can get by with just $250,000. The company may encourage you to buy more insurance than is necessary, so you have to keep your own needs in mind. You can also lower the term. Instead of getting a new 20-year policy, maybe you can get by with a 10-year term. Again, just long enough to get the mortgage paid off, for example. And you can save up and opt to pay your premiums annually instead of monthly. Some companies will give you up to a 5% discount for making a yearly lump sum payment. Your next option for when your term insurance policy expires is you can simply extend it. If you decide to go that route, there's usually no medical workup required. But since the insurer is going into this blind with no idea of any medical conditions that may have arisen in the past 20 years, the premiums will be higher than you'd have with a new policy, sometimes a lot higher. But keep in mind, if you have developed a serious medical condition, you may not be able to get a new policy at all. In that case, extending your current policy is definitely the way to go if you can afford it. If you can't, it leaves you with your last option, getting what's called a simplified term or instant issue policy. As you might guess, an instant issue policy requires no medical checkup. You apply, you're approved, and you start paying premiums. And usually you can do all of that online. Now, if you're thinking that sounds too good to be true, there must be a catch. Actually, there are three. First, the death benefit with this type of term policy tends to be smaller. Second, the term is likely to be shorter. And three, it probably will cost a lot more than a regular term policy that includes a medical exam. But for some folks, an instant issue policy could be a real blessing when their current term policy expires. All right, I hope that was helpful. Your calls are next, 800-525-7000. That's 800-525-7000. I'm Rob West, and this is Faith and Finance. We'll be right back.
We're grateful for support from Movement Mortgage, who provides residential home loans in all 50 states. Guided by a mission to love and value people and a goal to redefine the mortgage process, Movement seeks to help others achieve their financial goals. You can find out more at movement.com/faith. Movement Mortgage LLC supports equal housing opportunity, NMLS number 39179. For licensing information, please visit nmlsconsumeraccess.org.
Frustrated by your health insurance? Confused by the network restrictions and increasing premiums? There's a better way. Christian Healthcare Ministries. CHM is a Christian community delivering a faith-based solution to the high cost of healthcare. Take back control of your healthcare with the ability to choose a provider you trust with no network restrictions and savings of up to 40%. Learn more and enroll today at chministries.org/faithfi. That's chministries.org/faithfi.
Well, I'm so thankful to have you with us today on Faith and Finance. It's time to take your calls and questions here in just a moment. That number, 800-525-7000. What happens when you call that number? Well, Sandy will answer the phone and understand your question, help you get ready to be on the air, and we'll tackle it together. As you invite us into your story, we'd love to weigh in on how you can apply God's wisdom to the financial decisions and choices you're making today. Whether that's living, giving, owing, or growing God's money and everything in between, we'd love to talk about it with you. That number again, 800-525-7000. Our promise to you to be hopeful and encouraging, to be reverent as we tackle God's word and look at your situation through the lens of Scripture, but also very practical because we want to help you get to a decision. And that's, of course, always the ultimate goal. That number again, 800-525-7000. We'll dive into those questions here in just a moment. So this is a great opportunity for you to call. In the news today, as inflation continues to strain wallets across the country, a growing number of Americans are reconsidering their retirement plans. A recent survey by Live Career reveals that more than 80% of respondents have thought about delaying retirement for financial reasons, with 92% worried that they might have to work longer than expected. That fear of retirement is palpable. Shockingly, 61% of workers report fearing retirement more than death, while 64% find the idea scarier than divorce. These anxieties stem from concerns about running out of money in retirement, becoming a financial burden to loved ones, or perhaps lacking funds for medical emergencies. Vanguard's latest data offers a glimpse of hope, though, showing that the average balance in employer-sponsored retirement accounts rose to $134,000 in 2023. That's a 19% increase from the previous year. However, even with this growth, these figures still fall short of the 1.46 million many believe is necessary for a comfortable retirement today. The financial landscape remains challenging, though. High interest rates and ongoing inflation have driven up the cost of essentials like rent and gasoline and groceries. I don't need to tell you that. You're experiencing that every day. And this, of course, hits low-income Americans the hardest. Even though inflation has eased since its peak in 2022, prices are still significantly higher than they were just a few years ago. And as we've talked about often, as the rate of inflation decreases, it's still on top of all of these prior year increases, which were dramatically higher than the norm. And so inflation is cumulative. It's all building on one another. We really haven't seen and really don't expect to see any decreases in prices. It's just that the rate of increase is slowing. Now, given these economic pressures, it's no surprise that many Americans question whether retirement is a realistic goal. In fact, according to Nationwide, over a quarter of non-retired investors fear they might need to return to work due to inadequate savings, and about 19% doubt that they'll save enough to comfortably retire. How do we view this through the lens of God's Word? Well, while the challenges surrounding retirement savings are daunting, they also offer a unique opportunity for believers to trust in God's provision and take proactive steps towards securing their financial future. In the midst of uncertainty, we're reminded of the biblical principle of stewardship, that is, faithfully managing the resources God has entrusted to us. This includes reevaluating our savings strategy, could be seeking wise counsel, even making adjustments that align with both our financial goals and our faith. Just as Scripture encourages us to consider the ant and be industrious, that's found in Proverbs 6, we can also approach our financial planning with a spirit of wisdom and intentionality. Ultimately, our security does not rest in the size of our retirement accounts, but in our trust in God's faithfulness. By taking practical steps to manage our finances wisely, we can face the future confidently, knowing that God is with us every step of the way. Remember, He has said He'll never leave us or forsake us. So as we do our part, we can rest assured that He will provide for our needs both now and in the coming seasons. And I hope that's a bit of encouragement to you today as we think about the future in light of trusting God for His provision, knowing He alone is that place of refuge and security. But we need to do our part as faithful stewards, and hopefully we can encourage you to that end here on this program today. All right, we're ready to dive into those questions today. Whatever you're thinking about in your financial life, call right now, 800-525-7000. We will look forward to hearing from you. Let's begin today in Alabama with Ann. Go right ahead.
Hi, I am a pastor's wife, and about a year ago, my husband moved to a new church, and they are giving him a portion of his salary specifically for retirement, and they specified to be managed by us. We have already been contributing the max amount to our Roth IRAs. So I wondered what we should do with this money, if there was any other tax-efficient way to save it for retirement, or if we should just save it in a mutual fund or something like that.
Yeah, it's a great question. He has an IRA, and you also have a spousal IRA, and you've maxed out both of them? Yeah. Okay. Yeah. Very good. And is he paid W-2 or 1099?
W-2.
Okay. Yeah. So he's an employee. Yeah. I mean, I think one option, which would be a little bit longer term, would be to see if the church would be willing to set up a retirement plan. And it doesn't have to be one that requires a lot of oversight, and you don't need a lot of employees. I mean, often kind of the easiest turnkey solution is called a simple IRA. And it's a great option for the church not only to begin to offer benefits without a lot of the administration and headaches that come from a 401k, but it could be attractive to other employees, even with a small church. You know, this is something that, you know, the church can use to care for employees beyond even their pastor, your husband, for the others to make sure that they're safe.
He's currently the only employee, so that might be what we would want to do down the road. But until that point.
Yeah, very good. But even with one employee, I mean, it is an option, and it's not a costly one that they could set up, and it would give you guys the ability to do that, because that is permissible. You know, as long as you have fewer than 100 employees, you can do it. So now, getting back to your question, what other options do you have? I mean, the other option that folks will use, it's not my first choice, but when you run out of tax-deferred savings vehicles, then whole life insurance could be another way to do it. So you'd buy a whole life insurance policy that would accrue tax-deferred cash value. And it's a way for those folks who are trying to, catch up and have maxed out even their 401k and they're looking for another tax-deferred vehicle, or for somebody in your situation that doesn't have access to another type of plan on a tax-deferred basis. So what you'd want to do is connect with an advisor who could find you the very best whole life insurance policy that you could use as a savings vehicle alongside those IRAs. The reason they're not my first choice is they tend to be a little bit more complicated, and you are lumping in life insurance with it. But it does give you that ability to grow money on a tax-deferred basis. And then beyond that, to your point, yes, you could save in a taxable account and just buy, some high-quality mutual funds, maybe even some faith-based investing funds like we talk about on this program. But I would say getting the church to look at the simple IRA, it is truly simple to set up, and I think it would be a blessing to your husband and others after they start hiring more. And then whole life insurance, and beyond that, taxable mutual fund investing. You could find a CKA on our website as well. Thanks for your call. Well, we're going to take a quick break, but we'll be back with much more just around the corner as we apply God's wisdom to your financial decisions and choices. More calls right around the corner. This is Faith and Finance, and we'll be right back. Every day, we hear life-changing stories from listeners just like you who see money and possessions as tools to invite more people into God's kingdom. Instead of chasing wealth, you've chosen to embrace God as your source of love and provision. At FaithFi, we're passionate about meeting people where they live and work through our national radio program, app, resources, and website to influence widespread positive change in our culture. Please consider becoming a monthly partner at faithfi.com/give.
We are grateful for support from Praxis Mutual Funds. Praxis Mutual Funds has 7 impact strategies that are designed to create positive, real-world change. More information is available at praxismutualfunds.com. The fund's investment objectives, risks, charges, and expenses are contained in the prospectus and summary prospectus. This and other information is available at praxismutualfunds.com. Investments involve risk. Principal loss is possible. Foreside Fund Services, LLC.
Great to have you with us today on Faith and Finance. For taking your calls and questions today. The number to call, 800-525-7000. That's 800-525-7000. Let's go back to the phones to St. Louis, Missouri. Hi, Jonathan. Go ahead.
Hi. Thank you for taking my call.
You're welcome.
Okay, my question is, I have a 22-year-old son who is graduating with his computer science degree. He's been working part-time since high school, and he's very frugal with his money, but he's looking for a real job now, and he'll be making much more money. He lives at home with his mother. He has no debt, and so he's already in the black. He's doing pretty well for himself at his age, and I don't know very much wisdom financially to offer him how to invest his money as far as percentages to put into savings and to invest, and then how to invest. So I'm just looking for some direction for him, and I know that you have good counselors there. The only thing I can advise him is to honor God first and spend less than he makes and put money into savings, and that's about as far as I know what to say.
Yeah, very good. Well, you're on the right track here, Jonathan. I mean, I think the key is more is caught than taught. So, modeling good financial decision-making in your own financial life is obviously crucial because they're watching. But I think in the sense that you are, equipping him to make good decisions as he heads out on his own is really important. And I think you nailed it. We need to start with an understanding that God owns it all and we're stewards and everything belongs to him, and that money has a way of competing with our hearts for lordship and making sure that, the world would tell us that money can provide significance and security that it just can't provide. Only God can provide that. But it's a tool to accomplish God's purposes as we provide and as we enjoy it and as we give it away and even invest it. So those are some big ideas, and that, we were created to be workers. And so we're to work diligently and live simply and give generously. I mean, those are the character traits you want to be passing along. In terms of the mechanics, it comes down to really five kind of big ideas that are fairly simple, harder to execute on, and that is to live within your means, avoid debt, have some margin in your financial life, meaning don't spend right up to the edge, because that's how you fund your longer-term goals. Set long-term goals and give generously. So live within your means, avoid debt, have some margin, set long-term goals, give generously. As long as he's got that emergency fund, which is the starting place of, let's say, 3 months worth of expenses just starting out, and as long as he's setting himself up as a regular giver, so he kind of builds that muscle of worship and giving back to the Lord systematically on his increase, I think that's a great beginning point. And then beyond that, starting to invest for the future would be critical as well. And I think that's where perhaps starting a Roth IRA, if he doesn't yet have a retirement plan in his first job, if he does, and especially if there's some matching, I would take advantage of that first. That'd be the place to invest. Again, once he's giving, once he's got that emergency fund and a balanced budget, then starting to fund that 401k with matching. If he doesn't have that, then I would say opening a Roth, ROTH, Roth IRA, and he can put in up to $7,000 this year. And so perhaps setting up a systematic contribution to a Roth at, let's say, Schwab or Fidelity would be a great option. And then to be properly diversified, I'd probably just pick a really high-quality mutual fund. In fact, he could use one of the faith-based investing funds, which would allow him to know that he's investing he's owning companies, albeit a small percentage, but he's an owner of companies that align with his values as a believer if he's a Christ follower. And you could find a list of those mutual fund companies. I can give you a website to download the list and here in a moment. But give me your questions and thoughts on all that.
Yeah, that sounds great. I know about the Roth IRA, which I think it's taxed currently. Is that correct? It's not tax deferred?
That's exactly right. So you put in after-tax dollars. You get paid, you pay the tax on it, and then you make an after-tax contribution. So you don't get the current tax deduction, but you get a big win down the road because now 100% of that money that goes in grows tax-free. And when you pull it out in retirement after 59 and a half, you pay zero tax on, well, in his case, 45 years potentially of appreciation.
Yes. Okay. And then as far as investing in a 401k, once he has a good job, I know sometimes they have the choice in a 401k to choose whether to have a conservative, choice of 401k, or he can be more aggressive and risky, which it seems that being a young man, being more aggressive is probably not a bad thing to do at this point in life.
I think that's right. Yeah. I mean, he's got a lot of time on his side. And so, he wouldn't want to just put it all in, and I don't know what funds he has available, but let's say he has a technology, ETF in there or mutual. I mean, he wouldn't want to put all of it in because then you're just in one concentrated sector of the economy. So you still want to be properly diversified. But I think, yes, he would want to absolutely skew toward a more aggressive approach versus a more conservative approach because of the time horizon we're talking about.
Okay. And then are there resources? Do you have a website that we could go and do some research and maybe even look for a counselor to speak with in more elaborate terms?
Yeah. So let me do two things. One is I want to send you a resource. It's called Open Hands Finance, and it's a great tool that was created by just one of our good friends here at Faith Fi. Her name is Rachel Wong. She's a blogger and a writer. She and her husband went to Taylor University. They're believers, and they put a workbook together for college-age students, basically that helps walk them through not only the mechanics of setting up a budget and a spending plan with kind of some real life situations for them to kind of work out as they're going through the workbook, but also just an understanding of compound interest and debt and how to get started in setting up a Roth IRA. It's just a really great workbook, and with each lesson, a podcast that she and her husband did that kind of walks you through the lesson, and then you do the exercises in the book. So I think this could be a great tool. We'll send it to you as our gift. Again, it's called Open Hands Finance, and we'll put that in the mail to you. The challenge is when you're just starting out, they're really, unless you're just paying an advisor for their time, their business models typically don't work to help you select the investments on a brand new account. So you've got probably two options there. One would be to use one of the robo-advisors like Betterment or the Schwab Intelligent Portfolios, where you and your son would go through and he'd just answer a bunch of questions around his time horizon and age and goals and objectives. And then it would set up an automatic portfolio for him, and he would just put in a systematic contribution every month, and it would automatically rebalance it and invest it. It's very low cost, and it can be a very effective way to get started. Again, Betterment or the Schwab Intelligent Portfolios could work for you. If you want to download a list of those faith-based investing funds and just invest directly, that would be the second option I would give you. Just go to faithandinvesting.com/faithfi. Hang on the line. Jonathan will get your information and get this workbook out to you. God bless you, sir. A big thanks to my team today, Jim, Autumn, and Devin. Couldn't do it without them. We'll see you tomorrow. Bye-bye.
Faith and Finance is provided by FaithFi and listeners like you.